The US dollar has just dropped to a 4-month low. At the same time, gold has broken $5,000 per ounce for the first time in human history. And in that same week, something happened that hasn't occurred in 30 years. Central banks now hold more wealth in physical gold than in US government bonds. 3 events. 1 72-hour window. This is not coincidence. This is not volatility. This is the collapse of dollar dominance happening in real time. What makes this moment historic is speed. The Roman Empire took 200 years to fall after its currency failed. The British pound took 30 years to lose reserve status after World War I. The US dollar is losing credibility in 30 months. From early 2024, when the first cracks appeared, to January 2026, when central banks officially chose gold over treasuries, just 30 months. This isn't about gold prices, it isn't about charts. It's about the end of the financial system that has defined your entire life. Most people won't understand what's happening until it has already destroyed their purchasing power. Let's start with the number that changes everything. Gold is now $5,000 per ounce. In January 2000, gold was $280. In January 2020, it was $1,550. In January 2025, $2,650. Now in January 2026, it's $5,000. That's a 1,686% increase since 2000 and nearly a 90% gain in just 1 year. But this rally is different. This isn't retail speculation. This isn't hedge funds chasing momentum. This is central banks panic buying gold. In 2025 alone, central banks bought over 1,000 tons of gold 3 years in a row of record purchases, and buying is accelerating. Why would the most conservative institutions on earth act like this? Because they see what the public doesn't. They understand the math. And they know the dollar system is structurally broken. For the first time since 1996, central banks now hold more value in gold than in US Treasuries. Gold reserves, $4 trillion. Foreign-held US Treasuries, $3.9 trillion. Gold has officially replaced US government debt as the world's primary reserve asset. That means decades of trust ended in 1 week. Central banks chose physical metal over US promises. That's not diversification. That's a vote of no confidence. China is leading the shift. Officially, it claims 2,264 tons of gold. In reality, estimates place its true holdings above 5,000 tons. At the same time, China has cut its US Treasury holdings nearly in half, from $1.3 trillion to $680 billion. Russia exited completely after its reserves were frozen in 2022 and moved aggressively into gold. India, Turkey, Qatar, Poland, Singapore, and Eastern Europe are all buying. Japan is now a net seller. Saudi Arabia is reducing exposure. Europe is selling to fund defense. The buyers are gone. This is not a trend. It is a global stampede out of dollars. Why is this happening? First, the dollar is falling, even with high interest rates, something that only happens when markets expect massive money printing. The US has $38 trillion in debt, runs over $2 trillion in annual deficits, pays more than $1.2 trillion a year, just in interest. The math doesn't work. Second, sanctions destroyed trust. When $300 billion of Russian reserves were frozen, every central bank realized dollar reserves can be seized. Gold cannot. Third, US fiscal and political instability is undeniable. Debt to GDP is near 130%. Debt ceiling crises are constant. Policy changes are chaotic. Capital is leaving. Here's how this ends. Foreign buyers disappear. Treasury yields spike. The Fed steps in and prints. The dollar loses 30 to 40% of its value. Inflation explodes. Gold becomes the final store of trust. This puts the critical phase between mid-2026 and mid-2027. Gold at $5,000 is not the peak. It's the beginning. Every currency collapse in history follows this pattern, and gold survives every time. The window to act is measured in months, not years. Most people will wait. A few will prepare.